Well, welcome back, ladies and gentlemen. I figured we go live for fun, just to have a wonderful little chat because this is the first time in the last week after watching the markets begin to plummet here that I actually checked because I really honestly don't care that much. Usually these are just value investing opportunities for most people, but I logged into my accounts this morning for the first time all week and I'm like, oh God, let's make some price predictions on how much I'm down. And to be honest, with the all-time high, I'm pretty much at par with the S&P 500, which kind of blew my mind because I was really expecting to be down a hell of a lot more than $20,000. Probably down a little more today, but we'll have to take a look. I'll probably do a full update at the close of the market today. But my God, guys, sitting there watching Netflix earnings last night, being like the first real tech giant to post in the FANG, it was confusing as all hell for most people. If you watch those earnings, you would have saw something like 67% EPS number increases. They met on revenue and they slightly lowered guidance, yet the stock lost 25% of its market cap before the markets even opened today. So I'm like, well, if that's the precursor for tech earnings, it don't matter what the Fed does here. It's going to be a calamity, man. These next 2 weeks are going to be one hell of a wild ride. That's what we've been saying, folks. I mean, we've been saying, pay attention. This is going to be one of the craziest earnings week. Probably in the last year, considering the run-up we've had. I see added to Coinbase this morning, Tesla. Yeah, this is the godsend for actually trying to pick up real deals in the market and cost averaging. In fact, I keep saying that, I got over $1,000 in dividends. I do got paychecks coming in cash, and I'm just kind of sitting here. My parents got cash, and we're like, what do we do? What do we do? What do we buy? And to be honest, tech's coming into fair value here. We're not quite there yet, I'd say, but we're damn near close with some of these companies because, you're looking at things like Shopify, again, like Coinbase, and this is just large cap. I mean, how dare we even mention the small cap realm of things? You've been buying small caps, man. This is a hard place to want to cost average into until we're 100% sure we're bottoming out. Crypto is a bloodbath. Yeah, I was kind of shocked, actually. I logged into the crypto account. Actually, I didn't even add in the crypto account to my portfolio. Maybe I'm doing better than 20,000 down. Maybe. I don't know. I didn't even calculate in my crypto because I'm down pretty massive on Bitcoin. I think I was at a high of over 10,000. Today, my crypto wallet's at like 7,500. Yeah, it got slaughtered yesterday. I didn't even notice it until I logged in last night. I was like, oh man, my crypto's down more when I saw the Bitcoin price at $42,000. But yeah, I don't know, man. This is one of those things, right? Yeah, Disney, where's that doing today? I haven't checked a look at Disney. Psychedelic stocks are taking a hit bad. Bro, it ain't just the psychedelic stocks, but Disney's another interesting one. I mean, that one's been trading down pretty heavily even before a lot of this crazy bearish market we're heading into here. Let's take a look. Yeah, it's down like 30% from the all-time highs. These are the stocks, though, man. This is the time where we sit down, we start making a list of companies, and we start figuring out where we want to start allocating to. But I know a lot of people out there, I even laughed at kind of like Jeremy from Financial Education because he keeps saying, oh, well, what are you going to do? Wait for the rebound to happen here? Like, you never know when the rebound is, right? So, like, you should just start cost averaging it now. And I'd beg to differ. I would much rather see like a good 5-10% bump up in some of these stocks before I would start buying into these dips because it's trying to catch a falling knife is a hard game, man. Hard game. Look at the March 2020 crash, right? Like you could have waited for that to bottom out and start rebounding, and you had like months to figure that out. Dip seems to be being bought up. And yeah, today things are rising right now. I noticed that too just before I started the stream up that a lot of the stocks are coming back. Netflix has bumped up a little bit from those lows. VOO looks like it could turn green today, actually. Like the SPY could definitely, the S&P 500 could go green. I mean, Apple, Microsoft are green right now. Google's come back. Johnson & Johnson, Pepsi been doing pretty good. Yeah, I do got quite a bit of green in the portfolio today. It's definitely a lot better than I think it was yesterday by miles to some degree. But again, guys, look at Netflix. Like if Netflix could post such gangbuster numbers, guys, and drop 25%, what do you think that's going to mean for Facebook or Google if they lower guidance slightly here again? I don't understand most of this triggered sell-off because it'd be fun to correlate it to things like interest rate hikes and all this other stuff. But the fact of the matter is just there's money drying up in the market. Holy geez, I just look now. I need like a haircut, man. I haven't even shaved yet today. I rolled out of bed. My eyes are all glazed over here. It looks like I've been drinking my problems away almost, but nope, I'm good. Chill as a cucumber, baby. Please say a prayer for me as a Coinbase shareholder. What's Coinbase at, man? I actually like Coinbase. There's a lot of risk, obviously, because it's heavily exposed to the crypto market, but I'm still bullish as hell on crypto, man. I don't know why people beating a dead horse while it's down. It's down 44%, but again, I don't know what to do with Coinbase because they're dropping the NFT market, right? So I'd be patient with Coinbase because just depends on how bullish you are on crypto, man. But honestly, it doesn't matter if it's crypto, it doesn't matter if it's small caps. What matters is there's no money in the market. It's just drying up and nobody knows where it's going. I mean, the retail investors are dead right now. They've all dried up. I mean, what was AMC at today? I'm pretty sure AMC just took a shit tanking here, right? Let's take a look. Where's AMC? Yeah, it's down like another 3.98%. It looks like it might have bounced a little bit off some of the lows, but um, yeah, it's absolute shit terrorizing. People got to realize, man, there's no money in the market right now. So where's it going to come from? And it doesn't help that the Fed's going to jack up interest, which in this kind of bearish market, I'd be curious to see how fast they actually do it. This was a fun discussion, actually. If you guys want to go back and take a bit of a learning lesson, hit back to the 1970s and look at what happened during the commodities crunch when interest rates went through the roof because there was a big problem with oil. I can't remember the exact quote for quote here or verbatim or whatever. But back in the 1970s, right, what ended up happening was there was a lot of issues with some of the major oil providers for the U.S. and it led to a lot of people walking away from their jobs and stuff like that, and it led to an oil crunch that hit this hyperinflated market because obviously oil is one of the largest proponents to hyperinflation because it obviously reflects to how we get our food, housing, like everything is shipped and done through oil, cars, gasoline, flying, all that stuff, right? So when oil goes up heavily, it can easily cause a crunch on hyperinflation. And in the 1970s, right, it was really intriguing because they basically had to find a way to stop people from like overbuying gas. The lineups were down the road. The stock market was tanking. It's such a reminiscent time to right now. And that's when they increased interest rates by like 20 basis points. Like it was nuts how fast they increased the rates. Now, the neat thing about today and how that so severely correlates is you can't really get a hold on hyperinflation because when you look at what causes the rate of increases in prices, it's always commodity based. I mean, it's always oil. It's always going to be the lumber. It's always going to be these base metals like copper that we have to use to live our functioning lives and building new homes and just doing general stuff. And even though you can raise interest rates, if that doesn't pull down the supply and it doesn't help deal with the supply and demand problem, we could still be in a crazy rate of hyperinflation within the market, right? So it's kind of an intriguing period that we're in, but it's so reminiscent to the 1970s because you see it in everything. I mean, chips, you see it in housing, you're seeing it in oil and autos, and it's just all of that stuff accumulating. I don't think interest rates going up can like broadly just bring those things down. And even if hyperinflation levels off, the only reason it's leveling off is because these all-time high prices have flatlined. Now, I know a lot of people are calling for like a reverse in inflation because basically we're gonna meet a supply crunch where basically a lot of people are paranoid right now. That's why warehousing is doing so well. So they're buying up all their material in bulk, trying to get 6, 8, 12 months worth of supply. They're stacking it in warehousing and trying to bring manufacturing back to the US, back to, because the closer the manufacturing is to where you are, the less supply crunch you're going to have. Because obviously when this pandemic hit, China had to lock down a lot of the factories. And unfortunately, a lot of parts, whether you're talking cars, housing, there's a lot of finer materials that have to come out of these different supply chains. And when they get shut down, you could have 98% of parts for building a computer, but that 1% of parts that's being held up in China is going to hold back everything, right? So a lot of people are trying to work through these supply crunches right now, whether they're trying to remanufacture the products in home base or they're just trying to stock up supply, right? And what's going to end up happening if it does happen that way, then what we could see is that everyone has oversupply, and then all of a sudden the supply chain works itself out, and then we're left with 8 to 12 months of supply on the market and nobody really feeding the initial supply chain, which could cause a reversal in somewhat of the hyperinflated market. But it's hard to say, man. This is fun, bro. This is like one of the most complicated markets I think I've seen in a very long time. Can Stag just drop already so I can get the 4%? Yeah, I know. I always come back to Stag because warehousing is such a big deal right now, right? What's it at? I mean, it did pull back. I thought it had a 10% pullback for a little while. Honestly, though, like I said, I've been seasoned to the market, so I feel like the only people getting slaughtered right now are newer investors that haven't had the tolerance to understand like cost average investing. So yeah, in the last month, I mean, Stag's down from the all-time high. It's still down 10%. I mean, it's not like the greatest buying opportunity, but you're getting a 3.5% yield almost. Pretty intriguing stuff, man. But yeah, so it's going to be neat to see who actually stomachs this and who ends up coming back. because there's just a lot of money not in the market, man. And unfortunately, it don't matter how good your earnings are, if there's a bit of skittishness and no new money to replace it, it's gondo. Hey, Kyle, have you ever looked at GSY or GOE or Go Easy? Is the stock? Actually, I have not, but I got an intriguing one. I'll look that up just because you mentioned it here. But people have been mentioning really interesting stocks that I haven't looked at in the past. There's one called BST. This one is a closed end ETF almost. It's called BlackRock Science and Technology Trust. This trust actually outperformed the NASDAQ over the last, I think it's been around since 2019, the fund when it was invented. And it is such an intriguing setup. Because it pays such a huge yield basically off covered calls, off 30% of the fund, but it holds all of those incredible science companies, your Microsofts, your Googles, like just really foundational like growth companies, but they've mixed it in a weird way of getting into almost like venture capital where 25% of the fund is allocating toward companies that aren't publicly traded. I don't know if that's really venture capital. I mean, there's a lot of huge companies that you could buy into that aren't public, right? But the way they've structured it, oh man, it's such an intriguing thing. The only risk that comes with it really is the fact that you're dealing with a closed end fund, which is something I had to brush up on a little bit because there's a big difference between mutual funds, ETF, and closed end funds. And typically with closed end funds, they don't follow the NAV price. And the NAV price is just the fundamentals and the underlying cost of Microsoft, Google, etc. But what the closed end fund does is they basically just issue a set amount of shares, and then that closed end fund trades off the shares on the market, not the actual holdings within the company. Whereas with something like a Vanguard ETF, when you buy into it, they issue it new shares, and then they use the money you gave them to buy into the underlying assets. And then when you pull that money out, you're selling the shares back to the ETF, at which they'll have to actually like reallocate money outside of the holdings. So it's an interesting play. This BLK or BST. There's another one. I think it's BSTZ is another aspect of it as well. But again, I don't buy this stuff aggressively. I talk about a lot of stocks, guys, and people think I'm just buying these things because they're interesting to me. I find an interest in a lot of sectors in the market. Doesn't mean I'm going to buy into them. Obviously, everyone's kind of got their own, their own suave around stocks and where they're comfortable buying and how they diversify. But right now, the things that I'm most interested in, honestly, man, I'm definitely going to be picking up some of the S&P 500 if it dips enough. I just want to see it go more. What's a VOO at right now? I've been looking at VOO a lot. I haven't thought about buying into the Qs yet because I'm still more interested in owning the individual proponents of the QQQ. I know a lot of people keep coming around to it with TQQ and some of those triple leveraged funds, but yeah, the SPY's down the 6% on VOO. So if the S&P can take a bigger dip, I'm definitely more intrigued to pick up some of that. I'm definitely looking at the things like Amazon, Nvidia, Facebook. If it drops below 300, it's hard not to want to leverage the entire house onto it, depending on what earnings do. Do you plan on picking up some Nvidia? Not yet, because I feel like I'm hoping, I am gambling. I mean, this is pure speculation because we don't know how far the market's going to drop, but Nvidia is so insanely overvalued that it needs to drop literally in half. Like we need to see it get back down into the 200s to 150 range before we're at fair value. So if you're trying to mark in some of the exuberated future excitement of that company, I'd say I'd love to see it around the 2 to 220 mark. If we can get down to those prices, then I'd have a hard time not wanting to buy it. Because again, guys, like what we're going to get here, and this is going to be like, I think probably the most certainty I've had in trying to gamble and speculate on where the future is going. I think it doesn't really matter what happens in the next 6 to 12 months. The 6 to 12 month market's going to be volatile. I don't know what happens if stocks end of the year high or low or flat, or I mean, you could call it any way you want. But what I'm very certain of is that the demand for these products are excelling and they continue to excel. There might be some cooling off to some degree because obviously that's what the lowering of guidance is. But I think a lot of the lowered guidance that came out of Netflix and we're likely to see in Facebook and whatever was from the exuberation of being locked down in the pandemic. Because obviously in the lockdown period, everything just got super hyped up. And obviously everyone knew that wasn't going to last, even though it kind of excelled a little bit. But what's going to happen here, the next big accelerant, the next big gunpowder that's going to load the market up is when these supply constraints work themselves out. Like, do you know the demand for those graphics cards? They're nuts. And what it costs to build a computer because of the demand for those things selling for I mean, my MacBook was $4,800. I got like one of the best MacBooks you can get. Did you know just getting like an RTX 3090, let alone the new card? I think actually NVIDIA is trying to drop a cheaper card. They're trying to help deal with some of the problems. However, I mean, one graphics card, forget the hard drive, the GPUs or the CPUs, forget the motherboards and your RAM and your power supply and your computer that you got to put it all into the frame. I mean, just the graphics cards are selling for $3,000 to $4,000 on eBay, right? I mean, they're selling for more than a brand new MacBook. And it's intriguing to me because I mean Apple, and I keep coming back to this, and I really need to clip it and put it into a video. But when I listened to Tim Cook on that last earnings call for Apple, I think they said they lost $6 billion in the quarter because of the supply constraints. And it's just like, how can you not be bullish on this market, knowing that eventually the supply constraints are going to get worked out, whether it's 1 or 2 years from now? But when that happens and we can meet full demand, and Nvidia can just pump this Bitcoin market, pump the auto market, pump the gamer market, pump the metaverse market, and finally just get all that hardware out there, man, what that is going to do for revenue bumps is going to be insane. Now, obviously, I think Facebook, the only thing that gives them a good edge is they actually have real hardware now with the metaverse and obviously the Quest 2. But those companies, I don't think are going to be anywhere nearly as affected by that growth because obviously they're all based off the digital platforms and actually getting users involved. So to that degree, I'd actually be a little more bearish on Facebook and Google and a little more bullish on hardware-based companies, right? So your Microsoft, your Nvidia, your Apple. I think that's where they're gonna thrive when they can add those percentage bumps to their bottom line, all based on the assumptions we don't slip into a recession. Honestly, I mean, we could be heading into a recession, absolutely. But another intriguing aspect of the market right now to pay attention to is think about how bad every sector is getting hit. Watch real estate. When this kind of money starts bleeding out of the market, guys, I'm dying. I am dying inside to see real estate pull back. It's also sitting in the same problem of the supply and demand crunch, especially in Ontario, where I live outside of Toronto. I mean, homes an hour and a half out of the city are selling for $1 million+ But as somebody that would love to own a piece of real estate, whether it's to live in, to not have to pay rent, whether it's a condo, I mean, I would just desperately love to be back in a market where you can negotiate pricing on a property instead of these friggin' bidding wars and homes selling within 1 or 2 weeks without anybody doing inspections, for Christ's sakes. I mean, nobody's even touring homes anymore. They're just saying, hey, there's a deal, buy it. It's gone within 2 weeks. So what are you guys buying here? What interests you? How much are you guys down on your portfolios? I'm really curious to see who's getting hit, who's going to be honest here, because sometimes you got to wake up to the reality that is and accept it and just be wary of the long-term cost average idea of investing and know that these things are cyclical. And yeah, you might have to sit on your hands for a year, but been in the market now for 7 years. This is not the first dump I've seen. I mean, 2018, we had the Trump dump and the Chinese, the foreign market dump thing going on there with the tariffs, followed by obviously the March 2020 crash. And again, even in the initial first year of my portfolio, guys, I was down 40%. I keep reiterating this, that I didn't make money on my investing career in the first year and 4 or 5 months. So it's like, I can sit here and brag that I'm doing well, but I'm also completely honest about when I don't do well. And it's very similar to how a lot of people are probably doing right now that are new to the market. And I'm here to remind you that, hey, it's not all that bad. Trust me, you got a long time horizon here. And these dips are just getting better. I'm adding to ETFs. Yeah, that's probably the preliminary place to kind of baseline from. I think in downturns, the best place to start allocating is ETFs and then start picking up some of your favorite small caps. But it really depends, right? Buying Facebook, Starbucks now. Yeah, Starbucks, talked about that yesterday. Great. Looking at a buying opportunity there. Starbucks is intriguing. I really wanted coffee, but I wish I bought Starbucks in March 2020. Yeah, Facebook's probably still the only S&P top 10 that's at fair value. I think fair value on Facebook is 280 to 300. We're pretty much there now, and they haven't even priced in the metaverse. So you got so much runway for upside. I'm wrecked with Netflix. Is anyone else wrecked too? Yeah, Netflix is one that I never bought into, but it kind of follows suit with Disney, I'd say. Netflix, yeah, it's painful, man. It's wild to watch a stock that large and the FANG drop a quarter of its entire market cap in a single day. Intel's actually another good one. These chip makers have been getting destroyed. I mean, speaking of Nvidia, it's not even just Nvidia. Like, there is a lot of intriguingness in the chip making industry, and it really bothers me a lot because I used to work at a computer store. And I feel like I've been so ignorant to the chip market, and it really bothers me a lot actually at how much I haven't paid attention to that industry just because I'm a complete moron. And actually, Intel's doing pretty good. I mean, from its all-time highs, it hit a bottom of what? It was down 20%. And right now, it's only down, yeah, about 20%. I mean, Intel's actually holding up pretty good. Yeah, the PE on it's like 10. It's got a great starting yield at 2.6%. I haven't looked at the dividend history on it, but I'm quite confident that your dividend history is probably a bit of a decent growth rate as well. TSM makes everyone's chips. Yeah, that's another big one. I own 100 Intel at 48 bucks. What's Intel? What was that price? It's at what? 53 bucks. I mean, you're still up on it, right? Like I said, I rolled into my portfolio today and I was expecting to see a lot of red, but I'm actually still green on my Google position. I'm still green on almost everything for now, but I was also buying it probably a while back, right? So we got some room to drop still. Keeping it forever. This is a cash flow market, my man. To be honest, I'm less intrigued to be buying stocks that don't pay dividends right now, which is why it's always annoying because it's frustrating because I've already like maxed out my growth aspect of my portfolio. So the best I can do is maybe just buy a bit of Nvidia or start buying a different growth vector. But I really just want to make sure that I'm not too leaning away and not over under diversifying my growth and value plays. Um, because cash flow is king right now, man. This is what people forget about diversification. It's just like you can watch any YouTuber, your Meet Kevin's, you're in there. Everyone's always so strategically set in one mindset. Like PPC in is only dividends. Like you got these like gold investors and gold bugs and hardcore value players like your Peter Shivs of the world. And then you get your kind of like financial educations that are purely growth-based investors that only look for what they think is going to be the best growth potential outside of dividends and cash flow and value. So, I mean, I always find it weird that people don't look at all these aspects and realize that you'd probably have a much better performance period if you just allocated to each one of these. Like I used to hate gold. I mean, I had over 30,000 in gold, like in when was that? 2017 time frame, or no, maybe 2018 time frame, and I liquidated it and sold it all, which probably wasn't the best decision to make. But I've realized that like you can have a bull and bear case for all of these aspects of the market, but the reality is you should just own all these aspects of the market. Even if you don't like it, then allocate less to it. But at the end of the day, guys, like gold's up. I mean, gold's up in this market. Oil, I'm not a fan of the commodities as much. I mean, whether it's gold, oil, uranium, but look at the performance on some of those companies right now, man. They're excelling, right? I think if you add one more growth stock and maybe one more dividend stock, you'll be set. Keep those dividends reinvested. That's the thing, right? Like I got over $1,000 in dividends to reinvest. Most people probably spent their entire cash and have no cash flow because they focused on small caps, or not even small caps, just general growth companies. And this is not a growth market. It could be that way for the next 3 to 6 months, 6 to 12 months, and you're going to be real grateful if you have any cash flow, right? This is another problem that I think a lot of investors have, especially with real estate and stuff, is that it's incredibly hard to be finding decent cash flow in an all-time high market, unless you've been in early, right? Like most of my companies are paying out 5%. It'd just be nice to get to 1,000 a month. I keep getting sidetracked by Facebook and some of these other companies because unfortunately, this is kind of like a negative Nancy toward dividends, but it's a shame that when you're looking at companies and how you want to get your growth out of companies, and you have to ask yourself, like, do you want to be double taxed? Do you think your company should be double taxed? Because basically, when those companies make that income, they pay tax. And then when they pay you, you pay tax. And sometimes that company just retaining that capital, not paying the double tax, and then reinvesting it into something you think has much better growth than you investing it yourself is sometimes more prevalent. Again, why I'm so heavily bullish on Facebook because I think they're investing their money in the right places and they understand the scope of crypto and blockchain and the metaverse and these video games and Oculus and stuff like that. Dividends don't truly shine until there's a beautiful red day to utilize them. Yeah, exactly right. Cash flow at the end of the day is always king, but that doesn't mean cash flow has to be going into your pocket. I mean, you can own a growth stock that cash flow is fine into their own pocket, but again, it gets scary as hell because they're exposed. I mean, that's the double-edged sword, right? It's like, do you want to be double taxed and control the cash flow, or would you rather the company retain the cash flow, but then you have exposure to the public market where there's no control over valuations? Because this is the same problem with the real estate market, right? Like if you owned real estate, like one property in Canada or in Toronto for the last 2 years, you've doubled your money. If you've owned a REIT like RioCan for the last 2 years, you haven't doubled your money at all, but the underlying value of the REITs have exploded, like the underlying value of the real estate they own. It's just like the public market is disconnected from any underlying asset. And this is a really good and a really bad thing, because this allows you to buy companies at discounted values. Again, Alibaba, Charlie Munger, stuff like that. And it kind of gives you that exposure to a margin of safety, but you get none of the potential upside if the market just decides to dump your company. It's like one of the worst things about this is the justification for Bitcoin and having real estate and those kind of assets in your portfolio, because they're disconnected from that risk of a public market exposure. But then you take on different aspects of risk, right? Like if you buy one piece of real estate, you're highly under diversified, and typically real estate is people's largest investment. And after a decade of lowering interest rates, this kind of overinflated market, interest rates are going to go up. People are having less money to spend. Usually that doesn't bode well for the real estate market. So then you're exposed to like maybe having your largest investment in one asset that, in a bad period might not be the best. Especially if it's not cash flowing. A lot of people own homes to live in them, which I would bode to say is more of a liability than an asset. Like I said, everyone looks like a genius when the market goes up. And I know a lot of real estate guys, and I hate realtors that are like, oh, you got to buy this. It doesn't matter. And it shouldn't matter if you're looking for like a deal or whatever, but just to jump into this is nuts. There's nothing wrong with sitting on your hands for 2 or 3 years, guys. I mean, you can be real patient and save capital, right? I'd load up on Fortis to stabilize your portfolio income during a bear market. Yeah, I was actually thinking about buying more Algonquin Power. I could add to Fortis to continue to diversify, but I have so much exposure to the utility sector that I've been debating on, should I own, and like I have no exposure to industrials like your MMM, your 3M, your Caterpillars of the world. I've got none of that exposure. I feel like if I was to buy, see, that's the thing, right? It's trying to figure out where I'm under diversified, so I'm not constantly concentrating into the same asset classes. That's why I like Amazon a lot, because I don't have any exposure to say shipping or the whole like logistics industry and how Amazon operates. And then you're also getting the aspect of cloud computing. You get the AI stuff, and then obviously if self-driving comes into play, that only bodes better for their margins and their shipping industry stuff. Industrials, I guess Stag is considered an industrial. I guess I kind of underlooked that, but I kind of classify Stag as a REIT. Then I'd rather say it's an industrial. Kyle, did you hear about AEM, the Eagles Mines takeover for Kirkland Lake Gold? Massive company, pays good dividend. What's the Kirkland Lake Gold, or what are you saying? It's about AEM. Mines took over Kirkland. Let's take a look at AEM. Yeah, like I said, I don't typically buy the gold stocks because I don't see. Here's the thing with commodities. In markets like this, commodities are going to excel, but the problem I have with them is they're really good for swing trades. They're not necessarily good for the long term. Well, I guess they're good for the long term as an aspect of diversification, but typically the way I've looked at it is look at how cyclical oil's been. Look at how cyclical gold's been. Like you could have sat in the gold market for 10 years in a flat line where honestly it would be great to just swing trade those gold companies. But taking a look at Agnico, I don't even know how to pronounce that, AGNICO, Eagle Mines. Let's take a look at the max here. Oh yeah, they're doing pretty good actually. I mean, they're not back to where their all-time highs. I'm trying to see how much they're down here. If I can zoom out of this, my phone is all glitching out on me here. They're down what? Maybe like 10, 20%. Good starting yield, 2.7%. It's really not that bad. Yeah, if you're into gold, I mean, by all means, this is gonna be a great market for you guys. I'm just not intrigued as much. Because again, I don't know. It's a tough debate, right? Because this is the problem I also have with lithium graphite. I mean, I work with so many graphite companies. You have no idea. I mean, I work with a company called Salon Graphite. A lot of these nickel and battery kind of production companies in Canada. That I think Salon's based out of Sri Lanka, and they're working like they have some of the highest grade graphite mines on the planet. They're a small cap company. They've been getting destroyed, and they're actually getting into the battery production. They're partnering with companies in the UK. They're going to try and meet this massive demand. But the problem is like everyone's going to sit here and tell me why they're bullish on this sector, but they can't tell me how to value it. And that's what scares the living shit out of me, because like I don't want to play in wheelhouses I don't understand. Because if I'm going to do that, I might as well just buy an ETF. I understand banks, I understand utilities, I understand Facebook, I understand Stag Industrial, I understand how Apple operates. But if you told me how lithium gets valued, how it gets, like, I can see like there's so many different grades of graphite that have to be valued at different prices depending on purity. And then obviously it has to go to a manufacturer. What are the costs behind the actual, getting that apart? And then who are they selling it to? Is there a lot of competition to selling to clients? Like, are all these OEMs right now just partnering with these companies? Is that what's going to happen? Or are they getting demand elsewhere? Are they buying into the mines? Like, I don't understand any of that shit. So I'm so bullish on lithium. And you look at like something like an Lithium America Corp, which has just gone to the moon and back, but nobody's going to sit here and actually tell me how to value that shit. Like, what does it cost to get out of the ground? What does the refining process look like? What are the end margins? Are they 30%? Are they 50%? Are they 100%? I could sit here and tell you gold grades. Gold's easy to understand. I mean, you're going to get so many grams per ton. It's going to cost you so much to pull it out of the ground. You know exactly what it costs to refine, and you know what you're going to sell it for in the public market. And typically, all in, gold right now is about $1,100 an ounce to mine. It's usually between $900 and $1,100. That's what most miners are paying right now to get gold into its raw form. So their margins are insane. They're selling it for $1,800 an ounce. They're making $500 to $700. I mean, 30%, 40% margins right now, right? Like, I mean, gold, boom. I can understand that like it's nothing. I mean, to understand gold and understand how much gold is in the ground, they tell you all the assay work. I mean, it's not, gold is easy. That market's, that's why I could buy into that market, but I don't really care for it as much. But I mean that's sensible, right? And also like gold's fairly manipulated because of the banks, but we're heading into a major supply crunch for gold because most of the major miners are running out of huge amounts of supply, and they're going to be running into big problems in the next 10 to 15 years, which is making it very intriguing for these newer discoveries. So I mean, this is why I keep kind of stating that we're in a precious metal renaissance, whether you're talking copper, nickel, gold, graphite, uranium, all of this stuff is literally in a renaissance. Because I mean, none of that shit has been profitable for almost 10 years. And now out of nowhere, it's one of the most profitable businesses you can be in. So, I mean, it's very intriguing to see how the commodities are going to work themselves out, especially considering they drive a lot of the inflation problems. There's huge upside in them. The biggest problem with miners in mine closures and political concerns. Yeah, but you can pick your political jurisdictions, right? Like Canada is probably one of the most richest countries on the planet for everything from uranium to gold to nickel. I mean, Canada's biggest value is its resources, right? Oil, even though the government's been kicking the crap out of the oil market here. So, I mean, you can pick your jurisdictions. Like I know a company right now that I work with, what's it called? If it comes to my mind here, what the hell is it called? I have to look it up, but there's a gold mine right now in Argentina that has the highest grades of gold on the planet, and the stock has been going to the moon. I mean, anywhere in the Western world, I'd say like you're looking at a lot of lithium and exploration companies out of Chile. Chile is one of the biggest places right now for lithium. But if you go down to Argentina, anywhere really within the Western world is where you're typically going to find like a lot of the gold, silver, and those kind of miners. So I mean, stick to the countries and jurisdictions you understand, right? I wouldn't necessarily want to worry as much about maybe like I know Sri Lanka is a pretty good place, but they also have different mining rules where you can't do like blowing up mining. You can only do underground mining because they don't want to deal with some of the debris. I don't know what the deals are. Every country operates slightly different. So this comes back to the point: how much do you know? I mean, a lot of people ignorantly buy into stocks and they don't know shit about the industries or the business. Tesla needs copper for their batteries. Copper, man, go look at copper prices. Copper is going to be, it's used in everything. We're heading, like I said, into a commodities renaissance. You think it's just Tesla? I mean, what do you think about solar panels? What do you think about wind turbines? Even the motors that Tesla needs to use, they're all copper coiled. Actually, I think copper cars use something like, I don't want to throw numbers out, but it's like 40% or something more copper than the regular internal combustion engine. So yeah, man. I mean, go look at the largest lithium provider on the planet is out of China, and they said they're going to see supply crunches by 2025. I think it's going to be earlier than that because Tesla's already in battery crunches and supply crunches for their demand. So I mean, God, it's hard not to be bullish. It's just a matter of not being ignorant, because then you're speculating and you're gambling. It's like a casino, right? Like you're trying to walk into a casino, and the only odds you have in your favor is what you know about the industry. That's why the markets are fun, right? Because if you understand something, that gives you that percentage edge. That's where your edge is. That's where you're gambling and speculating, right? Like my edge is Facebook. My edge is Apple and Microsoft. Like I understand those companies tried and true, even though they're kind of hard to wrap around $1 trillion numbers. I just understand it because you can feel it, you can use it, you get it. It's sensible. You use their products, great, right? But when you get into these other sectors, you got to ask yourself, do I have that same kind of an edge? And if you don't, but you like the sector, then it's time for ETFs, because you're going to go broke if you don't know what you're doing. Anyways, folks, what are we at here? 11:44. I got a meeting in an hour and I'm going to eat some lunch here. Wire, copper, or aluminum, all of that shit, man. All of it. It's a commodities renaissance. It's not just copper. It's not just aluminum. It's all of it. All of it. All of it. Well, I guess did iron crash? Maybe not iron. Maybe a few exceptions. Right. You don't have to be all in sectors, in all sectors. No, you don't. I know a lot of people like diversify. Well, if you're going to do that, just buy the S&P 500. Then you can own all those sectors and have the best companies top weighting. So it's kind of nice. I don't, like you said, guys, you don't have to make money on every trade. I mean, I've watched stocks go to the moon and back. I watched Dogecoin go to the moon and back. I don't have to buy that shit to enjoy it and learn about it. This is like the same problem I have with the NFTs right now. Like I'm stating that NFTs are probably one of the largest bubbles that still need to burst in the market, but that doesn't mean you shouldn't be learning about it. The amount of money, man, the trillions of dollars that are about to be made on NFTs, I think are mind-boggling. Are you Canadian? Yes, I'm in the Great White North. It's freaking cold. It's like minus 27 degrees outside right now. It's brutal. Yeah, that's maybe I'll just iterate that quickly again, because I think people underestimate the value of NFTs because of smart contracts. But there's games coming out that I talked about, like Illuvium and Star Atlas, that are based off the Solana network and the Ethereum network. And basically every time one of those NFTs trade, the founders of those companies are making like 5, 10, 15% returns. And some of those NFTs are selling for $20,000, $30,000. They're going to be used within the game itself. Like, we're seeing a real shift in Web3. There's a guy that runs Hex. I don't know if you guys have seen him. I can't remember what the CEO's name is, but the guy actually like tweaks me the wrong way a lot. He's kind of an asshole. The Hex CEO, the guy that created that, I mean, he's very controversial. And the guy, like, I was watching a video where they asked him about what he thinks about like the metaverse, and he just shit on it. He's just like, "Oh, metaverse has been around forever. I've been playing games since the 90s. All the metaverse is a playable character with a skin with a name above its head and you have a mic. That's it." And it's just like, he didn't even answer the guy's question about is Hex going to be involved in like the metaverse plays? And Richard Hart, yeah, is that the guy? I found him intriguing, but some of his answers, like, I feel like he's a controversial guy, which is great for a CEO. I mean, you want to be controversial. Like, most of my TikToks and my videos, like, I try and just be more entertaining and like say controversial shit because it drives eyeballs. It keeps you in the limelight. It's kind of like being a celebrity in that aspect. It's a really good kind of a media tactic. But honestly, like, the guy just kind of comes off as arrogant a lot of the time. And, it's just like, I don't care about how many watches you have sitting in your fucking castle making fun of a guy driving a Civic. I mean, that dude, like, he just reams people so hard sometimes. And yeah, they're controversial topics, but it's like, dude, tell me the information. Like, I don't care about your ego. So many people get their egos involved with shit. It's just like, I don't care if you live in your mom's basement or you have $1 billion. Like, tell me why NFTs are cool. Tell me how NFTs are getting used. Tell me why your project is better than everybody else's. Like, give me some reason to give a shit. But just to shit on everybody in the metaverse is just like, you're not making me feel too good about your what you're doing here. Not sure the metaverse is nonsense since Snoop Dogg is selling concerts on it. No, okay, so look, the metaverse is nonsense. The term metaverse is stupid. The metaverse is your phone. When you log into your phone, you go on social media, you're in the metaverse. Okay, I think the real thing to pay attention to is what is called Web3, which I don't know who the fuck came up with that term. But the idea behind Web3 is the networking of all these metaverses coming together. Web3 is going to allow you to take like things like NFTs from a video game to your social media to anywhere you travel on the internet. Like, it's going to be this emergence of everything coming together. And what's really stupid, we were joking about this with my boss because we were talking about buying a piece of land in Decentraland because the boss wanted to put up their logo on one of the main streets. The problem is, in Decentraland or Sandbox or whatever, that prime real estate is selling for minimum $100,000. And the thing that bothers me a lot about it right now, and why I still think it's in a major bubble, is because you can make your own metaverse. You can make your own platform. If Snoop Dogg spends like $500,000 in this platform, it's cool for attention. But the fact of the matter is, you can hire a developer and make your own Decentraland. You can make your own metaverse and you can have people come and visit it, and you can make cryptos tied to it. It's just like, I don't think you need, you don't like, it's such a stupid term, metaverse, to be honest. It's been around forever. It already exists. It's not a new idea. You just have hardware advancing. So you have your Oculus, your virtual reality headsets, your augmented reality. So that's a big bump up. And then you're also having the Web3 and the crypto and the blockchain technology kind of merging all of these platforms together. And that's going to be the big bump in the internet. That's the new $1 trillion industry, right? Have you considered investing in real estate? I would love to invest in real estate. I just don't want to go broke doing it. Like where in rural Canada do you want to get a deal on real estate? I hate when people say this. It's like, okay, tell me where I have to live or own a rental property, because I'm an hour and a half out of the city in cottage country and homes are $1 million. It's just like, do I got to go like 3 hours up into Huntsville in the middle of nowhere, own like 100 acre? Alberta's nice, but I mean, do you want to see, that's the thing, right? I don't live in Alberta. So if I'm going to buy a rental property there, I'm going to have to like somehow fly out there or have somebody manage it. Yeah, I got family. Maybe we could talk to family. That's an option for sure. Yeah, Nunavut. Who the hell wants to own real estate in Nunavut? I'm just like, hey guys, if you don't live in Canada, it's freaking cold right now. You think it's cold in Ontario? Go to Alberta. Frig, Alberta's winters are brutal. They're vicious, man. So I mean, yeah, it'd be cool to own rental properties there, but the problem is I'm not an expert on real estate. I don't know Alberta. I know real estate in my backyard. I'd have no problem buying real estate here. I have to make more money first. So the goal is to save for the next 1 to 3 years, let it build up a little bit, and let's see what real estate the market does. And then maybe buy a place to live or buy a condo or buy a rental property or a duplex or a triplex and live in one aspect of it. But there's no rush to it. I mean, everyone wants to rush. What's the rush, man? Just keep learning. Calgary is good. No, yeah, Calgary is a good place, but I haven't been there, right? So it's not, I don't understand the market. And Catham is still affordable. Kyle, is that the same problem with cryptocurrency, unlimited amounts? Yeah, Calgary has a decent value. Yeah, so if you're relating the problem with cryptocurrency, unlimited amounts, yeah, so that's what people keep forgetting about. The bubble and the Decentraland and Sandbox and a lot of the NFT stuff is that anybody can make it. It's not proprietary. So that's the scary part, right? Coins can be created. Yeah. So that's why I only buy Bitcoin right now. I have a lot of people that keep hounding me for not buying other crypto projects, but that's the problem I have. Crypto right now, Bitcoin is truly the only, I'm kind of a Bitcoin maximalist, because the more you learn about the back end of these protocols and exactly the white papers behind them, like look at Ethereum is moving to proof of stake, which I'm not going to get into. I'm not going to bore you guys with this shit. But the problem with proof of stake is it gets rid of the true decentralized control. Because as soon as you move to proof of stake, you're giving a lot of control to people that are putting all of their money into the staking platforms. You're giving all of your money and control to the Ethereum network, and those guys can move that money around and manipulate it any way they want. That's the same thing with leveraging money and doing the APYs, like getting loaning your Bitcoin, say, to a company to have it leveraged and have them pay you a return. That causes major manipulation in the crypto market, whereas Bitcoin cannot have that on its own. And the purity of Bitcoin, it's the only proven crypto right now over the long term that I know for a fact is not going to go anywhere. I know it's not going to be obliterated into the ground. I know the network's not going to change. I know for a fact that like if it wasn't for Bitcoin, the metaverse and this Web3 shit wouldn't even exist. I mean, Ethereum wouldn't exist without Bitcoin. I mean, it's just like buying large caps. It's like I can name 20 tech stocks right now I think are cool, but are they going to be as reliable as Apple? Are they going to be as reliable as Facebook or Google? That's the problem, right? And I don't mind losing some upside to know the security of not having the downside of bankruptcy or things just going belly up or being highly manipulated. I mean, I've outperformed the market consistently because I think that's one of the true contributing factors to my success. I mean, MindMed was a great example of that. I mean, anytime I mean, Canopy Growth Corp. I've seen this since the beginning days of my investing career because I'm an idiot. I recognize I'm an idiot. So if I'm buying into a new sector that's speculative, where do I go? I don't care about the 10 other projects. I go to the top of the list. You just look at those top 3 companies and boom, you just pick one of those. The likelihood of you losing money if that industry takes off is like, it's so minimalized, right? I mean, back before the MJ market took off, I looked at Canopy and I said, look, I don't know what's going to do well before legalization, but I know if I own the largest MJ company, how can I lose? Like, how are people not seeing that? So I bought Canopy, made a fortune, right? MyMed, same example. The psychedelic industry looked like it was going to be huge. Why do I need all those 100 of psychedelic companies when I just could own Compass Pathways, MindMed, pick one of the top players, and it worked out, right? Not that it'll always work out, but I think that's what's given me these 40% returns, is just not dicking around in smaller areas of these markets. And that's crypto, man. I could see Bitcoin drop in half, but I know it's not going anywhere. You can't guarantee me that all of these crypto networks aren't going to be worthless in the next 5 to 10 years, because more than 90% of them will be. Almost, I guarantee like 98% of them are going to go to zero. So it's just a matter of I don't know what ones are. I'm not smart enough to know what ones will do better. I don't know shit. I'm an idiot. So I recognize my stupidity and I'm very cautious and methodical about where I place money for that reason. Most people do. All the major cities and towns are on the East Coast. Yeah, well, a lot of people are moving out to Newfoundland too, right? Not Newfoundland. Yeah, sorry, like yeah, East and West Coast, man. You kind of hit up out there when you're getting into PEI. I know PEI is a hot place because you can buy houses for still like 200,000 to 300,000. But again, that's not a lifestyle I want. For a rental property, maybe, but I need to be near an airport, bro. I want to be an Uber's way away from an airport. And trying to do that in Canada, you're going to be paying $1 million price tag for real estate, or at least $500,000 for a condo. He's talking about East VC Island. Yeah, I mean, a lot of those places are great. But again, do you want to live there? They're great retirement places, but there's nothing to do. There's just nothing out there. That's why real estate is cheap, right? I mean, you could find some good little pockets maybe where areas are blowing up and try and make some money, but I have never been out there, bro. It's out of my wheelhouse. I can look online, but I don't understand it, right? On that note, folks, I'm going to stop rambling. I appreciate everyone coming out. I'm going to go get some lunch and get ready and maybe post another video later. I'll show you guys the in-depth look of my portfolio. I've just been terribleizing my writing, trying to get ready for meetings today. I had 2 people bail. 2 meetings dropped me today, so I've had an hour to kill. And I was like, you know what? This has been a fun time for a live stream. The markets are fucking weird. And yeah, anyways, folks, I'm going to get out of here. Stay cool. Stay awesome. And I look forward to catching you guys in the next one. Peace.